Hello, folks. Welcome to the little known world of private lending. A little about me. I started as an entrepreneur at a young age. At just about 8 years old, I picked up pecans for the neighbors that had pecan trees, and then I went door to door selling those pecans to the neighbors that didn't have pecan trees. Not too long after, I would start setting up lemonade stands to sell lemonade. After receiving a Snoopy snow cone maker for my birthday, I built plenty of arm muscles, shaving that ice to sell snow cones. Moving on into the 6th grade, I went to selling bubble gum to my fellow students until I founded the more lucrative cinnamon toothpick business. I sold those until a teacher shut me down. At about 23 years old, I went to study in real estate, learning from Dorf to Roos and reading Rich Dad, Poor Dad. I bought my first property. It had 3 buildings on the property. I lived in the first one as we fixed it up, and after it was fixed, I moved my attention on to the second and third. From there, we moved to Durango, Colorado, and I did what I thought was going to be my first fix and flip. That changed into a fix and hold that netted more than $100,000 in equity. While remodeling that, though, I got into buying and selling real estate notes and investing in tax liens. Then I moved into the world of buying value-add properties and holding them for cash flow. One of the most recent ones of those we've turned into an almost 50% cash-on-cash return. Now that we built a team and started to focus on making an impact with our investing, while we're scaling it, we're attacking the affordability housing crisis one house at a time, which makes this a perfect time to take my business skills and real estate skills to helping good folks like you earn high rates of returns safely and securely. Now listen in as I explain how you can earn high rates of returns safely and securely. Ladies and gentlemen, stress-free investing. What you're about to discover is a great way to earn high interest rates, returns safely and securely in a way that most folks don't even know exists. In this video, I'm bringing you a very special message about how you can greatly increase the value of any investment you or your IRA have, whether it be CD or money market, mutual funds, commodities, stock market, or as a matter of fact, anything else. This message is about creating wealth through passive investments secured by real estate for safe and very attractive return. Most people try to create retirement income by following conventional wisdom and letting other people control their money and make decisions for them. By the time they need the money, they discover that they have barely kept up with the rate of inflation, and the cost of living has risen faster than their investments. Now let me tell you, listen in. This video is not about conventional wisdom. It's a fact that the super wealthy person that earned his or her wealth does not live by conventional wisdom. You see, if you don't do things differently than everybody else, you will have to be satisfied with the low returns following the herd mentality produces. Now here's the good news. You no longer have to accept low rates of return. Friend, you've received this video so you can consider joining forces in a mutually beneficial and profitable relationship. With this program, you don't have to watch the stock market, you don't have to call your broker, and you don't have to wait for the next smart stock market crash. My job is to find great deals on properties that may or may not need rehabbing and agreeing to buy them at cash wholesale prices. With this program, private lenders can invest and earn high rates of returns safely and securely because their investment is always secured by a deed of trust on the property. Now, this is a very lucrative vehicle for private lenders for many of these reasons. First is the safety issue. You see, I don't allow any of my private investors to invest more than 75% of the after repair value on the property. So in case Jody Ogden loses his mind, you as the private lender is left with a huge amount of equity as a safety cushion. So if my private lender had to sell the property, they could quickly recoup their investment and even make a profit on the property. So the very worst thing that could happen is my private lender ends up owning a house at a very deep discount. If that happens, my private lender can hire a realtor, sell it, and not only make their interest, but a huge profit. Next, a higher return is very attractive, you see. Now, listen to this closely. You see, I can pay my investors today as much as 20 times as much money as they can earn from a 12-month CD, and sometimes even more than that. What's more is they earn this high return regardless of what's happening in the stock market. You can rely on it, and you have no worry about the principal fluctuating, going up and down. The principal remains the same, and the private lender keeps earning the money over and over and over again. You may be wondering why anyone such as I would be willing to pay a high rate of return. Why would I do that? Well, it's because the quick availability of funds is more important than paying a lower rate to the bank. Really, I look at my lenders like silent partners. I give them a high, dependable, and safe return secured by real estate, and they supply the short-term capital to grow my business. It's a win-win for everybody. Plus, banks require applications, extra time to close, extra closing costs, and they have limits as to the number of loans they can make to any one company or investor. You see, I can move much faster without these limitations by using my private money lenders. As a result, I can negotiate more profitable deals while offering sellers a quick and easy sale. Incidentally, making high-interest loans is nothing new. There are companies in your city and in my city doing it right now. They've been doing it for more than 40 years, and they're more called finance companies or secondary lenders. Listen, it's a multi-billion-dollar industry. Companies like Security Finance, The Money Store, Beneficial Finance, Household Finance, these are just a few examples of their specialty. Their specialty is helping people who want to refinance and purchase a home to live in but can't qualify for those nice low interest rates from banks. Oh, by the way, before I get off the subject, just pull out one of your credit card statements and look at the rate. Congratulations, you are a person just like me that's willing to pay a high interest rate for short-term money that's easy to get. And of course, the reason that you're willing to do that is because you're placing the availability of funds as a priority above the cost every time you use one of those cards. Like I said, multi-billion-dollar industry. Now here's a thought. Well, actually more than a thought. It's reality for many of my lenders. What if you could turn the tables on the banks and grow rich the same way they have by using other people's money? Listen here. What happens when banks make a loan? They do it with your money. That's the money you are allowing to lie around in savings accounts and CDs at low rates that net less than the cost of inflation. You receive a paltry percentage points while the bank loans your money out at a higher rate. You see, they receive the difference, which is referred to as the spread. The spread amounts to billions of dollars monthly. That's why the banks have the big buildings in the big cities. So here's my question. Why don't you become the bank? If you can borrow money at a low rate and safely and securely lend it out at a higher rate, you can make a fortune off the spread. Now you're making money off the bank's money. Don't you just love it? Incidentally, if you aren't using your money, you've got the best rate of all. Do you know what it's called? Infinity. You see, when you have none of your own money invested, you can't measure the return. I know of one particular private lender who loaned out over $1 million in 1 year, and check this out. He borrowed all the money to loan it out, and he charged twice what he was paying. He made over $50,000 net in his pocket in 1 year without putting a penny of his own money out. He put up the bank's money. In fact, he used a credit line so he wouldn't have to pay interest while the money wasn't in use. Folks, he made $50,000 using the bank's money. Well, I'm sure you have other questions concerning private lending, so I'm going to address some of them right now. Most common questions from my private lenders are: first, The most often question I hear is, can you use your IRA or 401k to make these loans? And the answer is absolutely yes. You bet you can. In fact, it's a great use for them, and what a better way to go than tax deferred, or in the case of a Roth IRA, tax free. It's your IRA that must be now. Your IRA has to be self-directed. Now you ask, what's self-directed? This is easy to accomplish, and it's only a matter of moving it to an administrator of your choice, and then you can start making private loans and truly start self-directing it. I know several lenders that take the money out of their private plan, shift it into their own self-directed IRAs. You might want to consider this same thing if it applies to your circumstances, of course. And if your company plan doesn't have a history of a high rate of return that you're happy with. The second question is this. Is this a security or a mortgage pool? The answer is yes, and technically any debt instrument is a security. But it's not a security you're going to need to get licensed for or have to register with the SEC or anything like that. Of that nature, you'll own the whole loan with no other participants. You're in control all the way, which in itself makes this a better investment than any other investment. I know only when loans are pulled does it become a security. Now, when I find a house, I know what it takes to get the job done. If I need you to borrow more than you have available, then I'll have another private lender come to the table, or in some cases, I can fund the deal with more than one investor by simply giving one investor a first mortgage deed of trust and the other a second mortgage, with separate loans but secured by the same property. Of course, the second mortgage holder will now be in second place, but when you're willing to accept the inferior position, that gets you a better, higher rate of return than the first. They're both secured by the deed, but frankly, it shouldn't matter as long as the loan to ratio value doesn't exceed 75% of the after repair value. For an example, let's talk numbers. Let's say I've got a property I found it, and the numbers work like this. Let's say the property value is $100,000, so I'm not going to allow investors to invest more than $75,000. Well, as the numbers work, I need to borrow $75,000 of the $100,000 property now. I split that into a loan of 50% of $50,000 in the first mortgage, $25,000 in the second mortgage. Both loans are still secured because the total doesn't exceed the 75% of after repair value. Third question, who handles the paperwork in this kind of transaction? Well, it won't be me, and it won't be you. You should, and I will never allow you to write a check directly to me or my company. All real estate closings should be done, and as long as it's being done with me, will be done by a real estate attorney or title company or escrow company. Your check will be made out directly to the closing agent for the gross amount of the loan. All closing costs are paid by me. You, the investor, pays no closing costs. This is standard procedure, and in my program, just like any other loan done from anywhere else, regardless of who the lender is, it becomes the real estate attorney's responsibility to receive your funds, make sure that all the documents are in place to secure your investment, so you don't do any paperwork. You simply agree to make the loan and get the money to the real estate attorney when it's time. Next question you may ask is, how am I protected against fire loss and making sure that the title is clear of any other liens? The answer, first of all, I purchased title insurance as part of the closing cost. On purchases to ensure that we have a clear and clean title, and it'll be issued in naming you as the lender, as insured, to see this protects you against title defects, which affect your collateral. Plus, I purchased fire insurance as part of the closing cost. I want the fire insurance company to name you as the lender again, right on the policy, so if the house burns down or whatever act of God takes place, you get a check for the full amount of your loan. Now, when you receive your package after closing, it'll contain the original note, a copy of the deed of trust, which has been recorded at the courthouse. Again, the real estate attorney represents you and makes all this easy for you and ensures proper execution. Next question, is this a long-term investment? Well, that's up to you and me, and that's the beautiful part of this program. Most loans are interest only and range from 1 year to 3-year balloons, with all the principal due when the property is sold. However, this can be arranged in any way you want. To be arranged, it comes down to whatever it takes to make your investment needs and your investment plan work for you, of course. The longer the money stays out, the higher rate of return, the faster it's going to grow. For you, it's the interest only. You're going to earn interest on the entire principal all the time, and if you get a little piece of the principal every month on an amortized loan, that little piece is no longer receiving a higher rate of return. So most folks, my private money lenders, like to keep the money out and collect interest over only, or have it accrue interest. Next question is, making private loans really a safe investment? Well, if you apply common sense and don't break the rules I have in place to protect you, as safe as any other high yield investment, and a whole lot safer than most, in fact. My opinion, it's a lot safer than the stock market. Stop and think about it. With stocks, you're betting on companies you know very little about, and the volatility of the market is out of your control. You can do well 1 year and the next get wiped out. Every day you're wondering whether you're gaining or losing, going up or down. Is my stock increasing or is it decreasing? And the only choice you get to make is when to buy and when to sell. Now that's risky in my book. I don't care how good you are. The fact remains you don't get to make all the rules in the stock market. Your investment is at the mercy of the ever-changing circumstances. Now, on the other hand, compare that with private mortgage loans. With private loans that we've been talking about, your return is fixed. It won't change, regardless of whether the markets go up or down or sideways. While the stock market spirals downward and other investors are jumping out of the windows, you'll be smiling because today's fickle circumstances does not affect your money. You see, your loans are secured by real estate that you can see and touch. They aren't going anywhere, regardless of what the stock market does. You have a large hedge factor to protect yourself. If things don't go as planned, you get to make the rules, not be a slave to somebody else's rules. Now, don't you like that? The term rate, the conditions are all what we have agreed to, and there's no guesswork as to what's going to happen. You and I will be building our business relationship that could lead to other lucrative opportunities or joint ventures. You see, when people like us building the wealth together and prospering from each other's efforts, it sometimes leads to unseen other opportunities. I don't know of any other investment opportunity that gives you the safety, the stability, the high rate of return that private lending offers. I want to thank you for taking the time to listen in and learn about private lending. As a potential private lender, I'm sure you may have some questions. Just get back with me and I'll get your questions answered right away. I'm wishing you a very blessed and profitable future by becoming the next private money lender with me. Have a great one.